Welcome to the Trade House Bounce Back Sniper Boot Camp. My name is Zachary, and in this video, I'm going to be introducing you to smart money. You're going to hear a lot about smart money, and I want to set the right expectations now so that as you progress through the journey and get more and more involved with the community, you have a better appreciation for what smart money really means, at least in my opinion. This video is going to focus on three main things. First and foremost, who is smart money? Who are the professionals in this market environment? Secondly, we're going to discuss how this affects you. And third, we're going to talk about some of the things that you could do to make the most out of this development journey. It's very important to understand what it is that you're getting involved with here. Smart money, more than anything, is a mindset. We're going to go and build a small chart together that separates what the average mom and pop retail trader thinks compared to the professionals so that you can get more aligned with what a smart money individual might think like and what might act like compared to the average trader. The markets are always going to move in such a way where it will hurt the most people. You see, this is a transfer of wealth. Smart money predicts the future, and dumb money reacts. Smart money will create a problem to in turn get a reaction. And then they will present a predetermined solution. And thus, the transfer of wealth happens. You see, dumb money believes everything that they are told. But if you do some digging and you look into some of the things like the infrastructure that you'll use, perfect example, MetaTrader 4. If you do some digging, you'll come to learn some very interesting things about that particular platform. Smart money recognizes that there is a conflict of interest between the people who are winning and those who are losing in the markets. On the retail side, the first thing that we need to realize is that most people set unrealistic expectations. They come into a multi-trillion-dollar per day industry with a couple of $100 and think, I'm going to quit my job by next week. I'm going to become a multi-millionaire. I'm going to get rich quick. The average dumb money participant does not have a realistic expectation. They interact with the markets for a short-term, instant gratification. Whereas the professional, they have realistic expectations. They understand that preservation of capital comes first and foremost before growth. And they understand that by playing the long game, by putting themselves in a position where their reward to risk makes sense, rather than risking $1 to only make 70 cents, the professional, the smart money individual, likes to look at the market through the perspective of identifying 3-to-1 reward to risk setups, or 5-to-1, or even 10-to-1, where the amount that you are risking does not ever exceed your potential reward. The retail individual, more often than not, they stay poor. They come into this perhaps experiencing some quick success, maybe because they are following in the footsteps of somebody who is consistent and is successful, and they're considering their ideas, copying and pasting, if you will. And that instant gratification, that fast success that they experience, sets them up for failure because they don't learn the skills that they need to think and trade along smart money. They don't develop the habits. They don't become the person that they need to be in order to become wealthy. And the professional recognizes that this journey is an ever-ending development process. Trading in the markets, being a smart money participant, never ends. You will always have something to learn. You will always have something new to experience. And there is always an opportunity for you to make that shift, but you have to recognize where it is that you are now and where it is that you want to be. You see, I truly believe that people who are first getting started with absolutely zero experience that have been introduced to the smart money way of thinking have a much greater chance of success because they don't have to work through the bad habits, the unrealistic expectations, and the experiences that an individual who's been trading for a couple of months or a couple of years may have developed in a retail perspective. You see, as time goes on, you're going to build habits for yourself. You're going to build belief systems. You're going to learn about concepts that can allow you to align with the individuals who are moving the markets, that understand how the markets work, that recognize the conflict of interest, and that take the necessary steps to position themselves to experience wins. And realize that the average retail trader, they blow up. They lose their capital. There are so many statistics out there. You're going to hear things like 90% of traders lose 90% of their capital within the first 90 days. You're going to hear things like 96% of traders lose. And while I do agree that the percentage of people who lose is astronomically greater than those who succeed, the professional, the smart money individual is a trader forever. Because even when you are paper trading and practicing on a demo account, there is so many lessons to be learned. And this is something that far exceeds the monetary potential. Smart money individuals recognize how these markets will literally affect every single area within their life. Smart money is the banks. Smart money is the investment firms, your hedge funds, your money managers, the pension funds, the exchanges, even your retail brokers. Smart money are the individuals who own the narrative. I encourage you to really think for a minute about everything that you've ever heard related to the markets, everything that you believe to be true. And ask yourself this: why is it that most brokers out there, whether they are regulated or not, why is it that these brokers are willing to lend you, a complete stranger, 3 times, 10 times, 20 times, 100 times, 200 times, 500 times, 1,000 times the amount of money that you put in? When you're trading in the markets, if you ever decide to transition to a point where you are trading live funds and you accept the risk, you recognize that you could lose all or even more of the money that you have in your account balance. If that's something you ever decide to do, why is it that a complete stranger is willing to offer you leverage, the ability to multiply the amount of money that you initially put in so that you can then go and actually trade in these markets? Dumb money follows the philosophy of pressing the button as many times as possible every single day until they blow up. Are you playing for short-term, instant gratification so that you can say, hey, I took a trade today? Oh yeah, how'd it go? Oh, well, I caught 5 pips. All right, good for you. What about that loss that you experienced and it was a 50 pip stop loss relative to your 5 pip win? See, pressing the button and interacting with the markets, that is not a sustainable plan if you wish to develop a smart money mindset. And I'm going to leave you with this. When you go shopping, and you're at the grocery store looking for fruit, do you just grab the first one that's sitting there on the top of the pile? Or do you take some time to observe? Look for that nice, juicy, and ripe, organic fruit. The one that calls to you, the one that looks absolutely delicious, and you know when you take that first bite, you're going to receive the nutrients. It's going to taste absolutely amazing. And you put a little bit of time into actually going through the pile of fruit so that you could feel good about whatever it was that you were purchasing in that moment. If you're that type of person, like me, where you go shopping and you do your due diligence, you pay some level of attention to the quality of what you're buying, wouldn't it make sense to do the exact same thing with your money? Wouldn't it make sense to cherry pick the higher quality setups? Ones that will allow you to have a greater probability of experiencing your expected outcome. This, my friend, is smart money. Smart money is a mindset. It is one that you can absolutely develop. And as you learn various concepts, whether it's from the trade house or not, recognize that the level of success you experience will ultimately come back to you. You need to put in the time. You need to do the things you need to do. No matter what information anybody shares with you, don't just take it at face value. Do your research. Ask the questions. And come to a conclusion of what works for you. Because there is not a single person on this planet that has your eyes and the ability to analyze in the way that you do. There is not a single person on this planet, other than you, that has your brain and has the ability to think in exactly the same way that you do. If you're looking to become a smart money individual, discover the things that you need to be thinking. Discover the things that you need to be doing. And then think and do those things as consistently as possible. That is going to be all for this training. I will see you in a future video.